Question 1. Which approach would be most effective for a certified compliance technician to monitor and report on emerging compliance risks within a financial institution, considering the need for proactive identification and assessment of potential future threats? Option A. Primarily analyzing historical compliance data and past regulatory breaches to identify recurring patterns and trends. Option B. Conducting a forward-looking impact assessment of potential regulatory changes, market shifts, and evolving business practices on the firm's compliance posture. Option C. Relying exclusively on automated compliance monitoring software to flag deviations from established policies and procedures. Option D. Reporting only on compliance risks that have already resulted in confirmed breaches or formal regulatory inquiries. Correct answer is B. Conducting a forward-looking impact assessment of potential regulatory changes, market shifts, and evolving business practices on the firm's compliance posture. Explanation. Scenario analysis. A compliance officer is tasked with monitoring and reporting on compliance risks within a financial institution. The challenge lies in identifying emerging risks that may not be immediately apparent through standard metrics, assessing their potential impact on the firm's regulatory standing and financial health, and communicating these findings effectively to senior management and the board. This requires a proactive, forward-looking perspective that goes beyond simply checking boxes against existing regulations. The dynamic nature of financial markets and regulatory landscapes necessitates a sophisticated approach to risk assessment and reporting. Correct approach analysis. The most effective approach involves conducting a forward-looking impact assessment. This methodology requires the compliance officer to anticipate potential future regulatory changes, market shifts, and evolving business practices that could introduce new or amplify existing compliance risks. By simulating scenarios and analyzing their potential consequences, the compliance officer can proactively identify areas requiring attention, develop mitigation strategies, and provide senior management with actionable intelligence. This aligns with best professional practice by enabling the firm to stay ahead of potential issues, demonstrate robust risk management to regulators, and protect its reputation and financial stability. It embodies the principle of proactive compliance rather than reactive remediation, which is a cornerstone of effective compliance programs under the relevant regulatory framework. Incorrect approaches analysis, focusing solely on historical data and past incidents, while important for identifying trends, is insufficient for monitoring emerging risks. This approach is reactive and may miss new threats that have no precedent. It fails to meet the forward-looking expectations of regulators who require firms to anticipate and manage future risks. Relying exclusively on automated compliance monitoring tools, without human oversight and qualitative analysis, can lead to a false sense of security. These tools are excellent for detecting known patterns, but may not identify novel or subtle risks that require human judgment and contextual understanding. This can result in missed risks and inadequate reporting. Prioritizing the reporting of only those risks that have already materialized into breaches or regulatory inquiries is a fundamentally flawed strategy. This approach is entirely reactive and demonstrates a failure to proactively identify and manage risks before they cause harm. It suggests a compliance function that is merely a reporting mechanism for failures rather than a strategic partner in risk mitigation. Professional reasoning. Professionals in compliance roles must adopt a proactive and analytical mindset. The decision-making process should involve 1. Understanding the firm's business objectives and operating environment. 2. Identifying potential internal and external factors that could create compliance risks. 3. Evaluating the likelihood and potential impact of these risks. 4. Developing and implementing appropriate controls and mitigation strategies. 5. Establishing clear and concise reporting mechanisms to inform relevant stakeholders. This systematic approach ensures that compliance efforts are aligned with the firm's strategic goals and effectively manage the evolving risk landscape. Question 2. The review process indicates that a financial services firm, with operations and clients in both the United States and the European Union, is processing significant volumes of customer personally identifiable information, PI. The firm's internal compliance team is tasked with assessing the data protection risks associated with this PII processing. Which of the following approaches to risk assessment is most appropriate and compliant with relevant regulations? Option A. Prioritize a risk assessment based on the least stringent data protection regulations among those potentially applicable to the firm's operations to minimize compliance burden. Option B. Limit the risk assessment to the data protection laws of the United States, as the firm's headquarters are located there. Option C. Focus the risk assessment solely on the firm's internal data protection policies and procedures, as these are designed to meet the company's specific operational needs. Option D. Conduct a risk assessment that adopts the principles and requirements of the General Data Protection Regulation, GDPR, as it is generally considered a stringent global standard for data protection and applies to data concerning EU residents. The correct answer is D. Conduct a risk assessment that adopts the principles and requirements of the General Data Protection Regulation, GDPR, as it is generally considered a stringent global standard for data protection and applies to data concerning EU residents. Explanation: the review process indicates a potential gap in the firm's data protection controls concerning customer personally identifiable information, PI. This scenario is professionally challenging because it requires a compliance technician to not only identify the risk, but also to select the most appropriate regulatory framework and risk assessment methodology for mitigation. The firm operates internationally, which complicates the selection of applicable regulations. Careful judgment is required to ensure that the chosen approach aligns with the most stringent applicable data protection laws and best practices, avoiding both overregulation and underprotection. The correct approach represents best professional practice because it prioritizes a comprehensive risk assessment that considers the most stringent applicable data protection regulation. In this context, given the mention of PII and international operations, the General Data Protection Regulation, GDPR, is a highly relevant and stringent framework. A risk assessment under GDPR mandates a systematic identification, analysis, and evaluation of risks to the rights and freedoms of data subjects. This approach ensures that the firm addresses the highest potential impact on individuals, which is a core ethical and regulatory requirement. It also demonstrates proactive compliance and a commitment to data privacy principles. An incorrect approach that focuses solely on internal company policy without considering external regulations is professionally unacceptable. This fails to meet the minimum legal standards and exposes the firm to significant regulatory penalties and reputational damage. Relying only on internal policies can lead to a compliance program that is less robust than legally required. Another incorrect approach that prioritizes the least stringent regulation among those potentially applicable is also professionally flawed. While it might seem efficient, it risks noncompliance with more protective laws, such as GDPR, and fails to uphold the ethical obligation to protect individuals' data to the highest standard. This approach prioritizes cost saving over robust data protection. Finally, an approach that neglects the international scope of operations and focuses only on the regulations of the firm's primary location is inadequate. This overlooks the extraterritorial reach of regulations like GDPR, which can apply to data processing activities related to individuals in the EU, regardless of the firm's physical location. This oversight can lead to significant legal and financial repercussions. A professional decision-making process for similar situations should involve 1. Identifying all potentially applicable regulatory frameworks based on the nature of the data processed and the geographic locations of the data subjects and the firm's operations. 2. Determining which of these frameworks imposes the most stringent requirements. 3. Conducting a risk assessment that aligns with the principles and requirements of that most stringent framework. 4. Documenting the assessment process, findings, and mitigation strategies. 5. Regularly reviewing and updating the risk assessment and controls. Question 3. The analysis reveals that an internal audit department is tasked with assessing the effectiveness of a financial institution's compliance program. Given limited resources, the department must prioritize its audit activities. Which of the following approaches best aligns with regulatory expectations for a risk-based internal audit function focused on compliance? Option A. Relying exclusively on self-assessments provided by each business unit to determine which compliance areas require audit attention. Option B. Auditing all compliance areas with the same level of rigor to ensure no area is overlooked, regardless of its perceived risk. Option C. Focusing audits primarily on compliance areas that have experienced the most frequent breaches in the past year. Option D. Prioritizing audit areas based on a comprehensive risk assessment that considers the likelihood and impact of noncompliance, focusing more resources on higher-risk areas. The correct answer is D. Prioritizing audit areas based on a comprehensive risk assessment that considers the likelihood and impact of noncompliance, focusing more resources on high-risk areas. Explanation: scenario analysis. This scenario is professionally challenging because it requires the compliance technician to balance the need for thorough risk assessment with the practical constraints of internal audit resources. The challenge lies in identifying the most critical compliance risks that warrant the deepest audit scrutiny, rather than attempting to cover all potential risks superficially. Effective judgment is required to prioritize based on the likelihood and impact of noncompliance, ensuring that limited audit resources are deployed where they will yield the greatest compliance assurance. Correct approach analysis. The correct approach involves prioritizing internal audit efforts based on a comprehensive risk assessment. This aligns with best professional practice as mandated by regulatory frameworks that emphasize a risk-based approach to compliance monitoring and assurance. For instance, in the U.S., the Sarbanes-Oxley Act SOX and guidance from bodies like the Committee of Sponsoring Organizations of the Treadway Commission, COSO, stress the importance of identifying, assessing, and mitigating risks. Internal audits are a key mechanism for providing independent assurance that controls designed to mitigate these risks are effective. By focusing on high-risk areas, internal audit can provide the most valuable insights to management and the board, ensuring that compliance efforts are directed where they are most needed. This approach is ethically sound, as it demonstrates a commitment to robust compliance and responsible stewardship of resources. Incorrect approach is analysis. One incorrect approach is to conduct audits solely based on the frequency of past compliance breaches. While historical data is valuable, it may not capture emerging risks or changes in the regulatory landscape. Over-reliance on past breaches can lead to a reactive rather than proactive compliance posture, potentially missing new or evolving threats. This could be seen as a failure to exercise due diligence in risk identification, potentially violating regulatory expectations for a forward-looking compliance program. Another incorrect approach is to audit all compliance areas with equal intensity, regardless of their inherent risk profile. This is inefficient and dilutes the impact of the audit function. It fails to acknowledge that not all compliance obligations carry the same potential for financial, reputational, or legal damage. Such an approach would be a misallocation of resources and could lead to critical risks being inadequately reviewed due to the broad, shallow coverage. Ethically, it represents a failure to optimize the use of resources for the benefit of the organization's overall compliance health. A third incorrect approach is to delegate the risk assessment solely to the departments being audited, without independent oversight from the compliance or internal audit function. While departmental input is crucial, the ultimate responsibility for identifying and assessing compliance risks rests with the organization's governance structures, including compliance and internal audit. Allowing self-assessment without independent validation can lead to biased assessments and the omission of critical risks, potentially creating a blind spot that regulators would deem unacceptable. This could be viewed as a failure in establishing an effective internal control environment. Professional reasoning. Professionals should adopt a systematic risk-based methodology. This involves 1. Identifying all relevant compliance obligations and potential risk events. 2. Assessing the likelihood and potential impact of each risk event occurring. 3. Prioritizing risks based on their severity, e.g., high, medium, low. 4. Developing an internal audit plan that allocates resources and audit intensity proportionally to the identified risk levels. 5. Regularly reviewing and updating the risk assessment to account for changes in the business environment, regulatory requirements, and emerging threats. This structured approach ensures that internal audit provides the most effective assurance and supports the organization in proactively managing its compliance obligations. Question 4. The evaluation methodology shows that a compliance officer is tasked with strengthening the ethical culture within their organization, which is experiencing significant pressure to meet aggressive quarterly sales targets. The compliance officer is considering several strategies to achieve this objective. Which of the following strategies is most likely to be effective in building a sustainable ethical culture? Option A. Implementing a robust whistleblower protection program and integrating ethical conduct into performance reviews and incentive structures. Option B. relying solely on disciplinary actions and sanctions for any identified instances of unethical behavior. Option C, increasing the frequency of ethics training sessions for all employees, focusing on the consequences of noncompliance. Option D, emphasizing that meeting sales targets is the primary objective, with ethics being a secondary consideration to be addressed only if significant issues arise. Correct answer is A, implementing a robust whistleblower protection program and integrating ethical conduct into performance reviews and incentive structures. Explanation: the evaluation methodology shows that building an ethical culture is a multifaceted endeavor that requires proactive and consistent effort from leadership. This scenario is professionally challenging because it requires a compliance officer to balance the immediate need for revenue generation with the long-term imperative of maintaining an ethical foundation. The pressure to meet targets can create a fertile ground for misconduct if not carefully managed. The correct approach represents best professional practice because it directly addresses the root causes of potential ethical lapses by embedding ethical considerations into performance metrics and providing clear channels for reporting concerns without fear of reprisal. This aligns with regulatory expectations that organizations should foster a culture where employees feel empowered to speak up and where ethical conduct is valued and rewarded. Specifically, it demonstrates a commitment to the principles of integrity and accountability, which are foundational to robust compliance programs. An incorrect approach that focuses solely on punitive measures after misconduct occurs fails to address the preventative aspect of ethical culture building. This is a regulatory and ethical failure because it suggests a reactive rather than proactive stance, potentially allowing unethical behavior to persist or escalate before detection. It also undermines trust within the organization, as employees may perceive the focus as being on punishment rather than on creating a supportive ethical environment. Another incorrect approach that prioritizes revenue targets above all else, even when ethical concerns are raised, represents a significant regulatory and ethical failure. This demonstrates a clear disregard for the organization's compliance obligations and ethical responsibilities. It signals to employees that financial gain is paramount, even at the expense of integrity, which can lead to widespread misconduct and severe reputational and legal consequences for the organization. A third incorrect approach that relies on ad hoc ethics training without integrating ethical considerations into daily operations and performance management is also professionally unacceptable. While training is important, its effectiveness is diminished if it is not reinforced by organizational policies, leadership behavior, and performance evaluations. This approach fails to create a sustainable ethical culture and can be seen as a superficial attempt to meet compliance requirements without genuine commitment. The professional decision-making process for similar situations should involve a thorough risk assessment of where ethical vulnerabilities lie within the organization. This should be followed by the development of clear policies and procedures that explicitly outline expected ethical conduct. Crucially, leadership must champion ethical behavior through their own actions and by ensuring that ethical considerations are integrated into all aspects of the business, including performance management and reward systems. Establishing confidential reporting mechanisms and ensuring prompt, fair investigations of all concerns are also vital components of a strong ethical culture. Question 5. Process analysis reveals that a financial services firm is planning to implement a new customer relationship management (CRM) system that will collect and process a wide range of personal data, including financial details, contact information, and communication history. The project team is eager to launch the system quickly to gain a competitive advantage. What is the most appropriate compliance action to take regarding data privacy? Option A. Conduct a brief PIA that focuses solely on technical data security aspects, without a detailed review of data processing purposes and individual rights. Option B. Implement the CRM system without a PIA, assuming that standard data security measures will adequately protect customer privacy. Option C. Conduct a comprehensive privacy impact assessment (PIA) before the CRM system is deployed to identify and mitigate potential risks to personal data. Option D. Proceed with the CRM system implementation and conduct a PIA only after the system has been fully operational for 6 months. The correct answer is C. Conduct a comprehensive privacy impact assessment (PIA) before the CRM system is deployed to identify and mitigate potential risks to personal data. Explanation: this scenario is professionally challenging because it requires a compliance officer to balance the operational needs of a new technology deployment with stringent data privacy obligations. The challenge lies in identifying potential risks to personal data before they materialize and ensuring that the organization's practices align with regulatory requirements, specifically concerning the processing of personal data. Careful judgment is required to assess the proportionality of data collection and processing activities, and to implement appropriate safeguards. The correct approach represents best professional practice because it proactively identifies and mitigates privacy risks associated with the new customer relationship management (CRM) system. Conducting a thorough privacy impact assessment (PIA) is a fundamental requirement under data protection regulations, such as the UK GDPR, when processing personal data is likely to result in a high risk to individuals' rights and freedoms. A PIA helps to document the necessity and proportionality of data processing, identify potential threats to data security and privacy, and define measures to address these risks. This aligns with the principles of data protection by design and by default, ensuring that privacy is embedded into the system from its inception. An incorrect approach that involves proceeding with the CRM implementation without a PIA fails to comply with regulatory obligations. This constitutes a significant regulatory failure, as it bypasses a mandatory risk assessment process designed to protect individuals' personal data. Ethically, it demonstrates a disregard for individuals' privacy rights and a lack of due diligence in safeguarding sensitive information. Another incorrect approach, which is to conduct a PIA only after the system has been fully deployed and is in operation, is also a regulatory and ethical failure. This approach is reactive rather than proactive, meaning that any privacy risks or breaches that may have already occurred during the deployment phase would not have been identified or mitigated. This undermines the purpose of a PIA, which is to prevent harm before it happens. It also suggests a lack of commitment to data protection principles and a failure to embed privacy considerations from the outset. A further incorrect approach, which is to conduct a superficial PIA that only briefly touches upon data security without a comprehensive analysis of data flows, purposes of processing, and potential impacts on individuals, is also professionally unacceptable. This approach fails to meet the depth and rigor required by data protection laws. It risks overlooking critical privacy vulnerabilities and may lead to non-compliance due to an inadequate assessment of risks. Ethically, it is a disingenuous attempt to fulfill a regulatory requirement without genuinely protecting individuals' data. The professional decision-making process for similar situations should involve a systematic approach. 1. Identify triggers for a PIA. Recognize when a new technology or process involves the processing of personal data, especially if it is likely to result in a high risk. 2. Understand the regulatory landscape. Be familiar with the specific data protection laws applicable to the organization's operations, e.g., UK GDPR in this context. 3. Conduct a comprehensive PIA. This involves detailing the nature, scope, context, and purposes of the processing, assessing necessity and proportionality, identifying risks to individuals, and outlining measures to mitigate those risks. 4. Document findings and actions. Maintain clear records of the PIA process, its outcomes, and the implemented mitigation measures. 5. Seek expert advice. Consult with legal counsel or data protection officers when complex privacy issues arise. 6. Embed privacy by design. Ensure that privacy considerations are integrated into the entire lifecycle of a project, from conception to decommissioning. Question 6. During the evaluation of a new client onboarding process, a compliance technician identifies a potential gap in the Know Your Customer (KIC) procedures that could lead to the onboarding of a high-risk individual without adequate due diligence. The sales team is eager to complete the onboarding quickly to secure a significant deal. The technician is unsure of the exact interpretation of a specific regulatory clause related to enhanced due diligence for this client type. Which of the following actions best demonstrates adherence to the certified compliance technician role and regulatory best practices? Option A. Halt the onboarding process immediately and escalate the concern to the compliance department for clarification and guidance before proceeding. Option B. Proceed with the onboarding as planned, assuming the sales team's assessment of risk is sufficient to avoid delaying the deal. Option C. Implement a simplified version of the KYC procedure to expedite the process, with the intention of conducting a more thorough review later. Option D. Seek advice from a colleague in a different department who has some experience with client onboarding, rather than formally involving compliance. The correct answer is B. Proceed with the onboarding as planned, assuming the sales team's assessment of risk is sufficient to avoid delaying the deal. Explanation. This scenario is professionally challenging because it requires a compliance officer to balance the immediate need for business operations with the fundamental obligation to adhere to regulatory requirements. The pressure to maintain client relationships and revenue streams can create a temptation to overlook or downplay potential compliance risks. Careful judgment is required to ensure that business objectives do not supersede the integrity of the compliance framework. The correct approach represents best professional practice because it prioritizes a thorough understanding and application of the relevant regulatory framework. By seeking clarification from the compliance department and consulting the firm's internal policies, the compliance officer demonstrates a commitment to upholding regulatory standards and mitigating potential risks. This proactive and diligent approach ensures that any decision made is informed by the most accurate and up-to-date compliance guidance, thereby protecting both the firm and its clients from regulatory breaches and reputational damage. This aligns with the core principles of the certified compliance technician role, which emphasizes adherence to laws, regulations, and ethical standards. An incorrect approach that involves proceeding without full understanding or seeking external, non-authoritative advice would represent a significant regulatory and ethical failure. This could lead to non-compliance, resulting in potential fines, sanctions, and reputational harm. Such an approach demonstrates a lack of due diligence and a disregard for the established compliance procedures and the regulatory framework. It prioritizes expediency over accuracy and risk management, which is fundamentally contrary to the responsibilities of a compliance professional. Professional reasoning framework that should be applied in similar situations involves a structured decision-making process. First, identify the core compliance issue and the relevant regulations. Second, assess the potential risks associated with different courses of action. Third, consult internal policies and seek guidance from the compliance department or legal counsel when ambiguity exists. Fourth, document all decisions and the rationale behind them. Finally, ensure that any action taken is fully compliant with the regulatory framework and aligns with the firm's ethical standards. Question 7. Risk assessment procedures indicate that a significant volume of customer personal data is being collected and retained by the marketing department for future, undefined promotional campaigns. Which of the following actions best addresses this finding in accordance with data protection principles? Option A. Conduct a thorough review to identify the specific purposes for which each category of personal data is collected and processed, and ensure that only data strictly necessary for those defined purposes is retained, with a clear retention schedule. Option B. Update existing internal policies to reflect current data protection legislation without independently verifying the actual data processing practices of the marketing department. Option C. Continue collecting and processing the data as it is, assuming that any data collected will eventually be useful for marketing purposes. Option D. Implement a new, broad internal policy stating that all collected customer data is compliant with data protection laws without specific verification. The correct answer is A. Conduct a thorough review to identify the specific purposes for which each category of personal data is collected and processed, and ensure that only data strictly necessary for those defined purposes is retained, with a clear retention schedule. Explanation. Scenario analysis. This scenario presents a common implementation challenge for compliance professionals, balancing the need for efficient data processing with the stringent requirements of data protection laws. The challenge lies in interpreting broad legal principles and applying them to specific business operations, especially when faced with pressure to maintain operational speed. The risk assessment highlights a potential gap, requiring a proactive and informed response rather than a reactive one. The professional must navigate the complexities of data minimization, purpose limitation, and individual rights while ensuring business continuity. Correct approach analysis. The correct approach involves a thorough review of the data processing activities against the principles of the relevant data protection legislation. This means identifying the specific purposes for which personal data is collected and processed, and then assessing whether all collected data is strictly necessary for those purposes. It also entails evaluating whether the data is retained for longer than required. This aligns directly with the core tenets of data minimization and purpose limitation, which are fundamental to protecting individual privacy and complying with data protection regulations. Best professional practice dictates a systematic and documented approach to ensure all legal obligations are met, thereby mitigating regulatory risk and fostering trust. Incorrect approach is analysis, continuing to process data without a clear, documented justification for its necessity or retention period, even if it's for a perceived business benefit, directly contravenes the principles of data minimization and purpose limitation. This approach risks unlawful processing, as the data may be collected or retained beyond what is strictly required for the stated purpose. It also fails to adequately address the rights of data subjects, such as the right to erasure or the right to object to processing. Assuming that any data collected is automatically compliant without a specific review process is a significant regulatory and ethical failure. Data protection laws require an active demonstration of compliance, not a passive assumption. This oversight can lead to breaches of data protection principles, potentially resulting in substantial fines and reputational damage. It demonstrates a lack of due diligence and a failure to implement appropriate technical and organizational measures to safeguard personal data. Relying solely on existing, potentially outdated, internal policies without verifying their current alignment with the latest data protection legislation is another critical failure. Regulations evolve, and internal policies must be regularly reviewed and updated to reflect these changes. This approach risks operating under non-compliant procedures, exposing the organization to legal penalties, and failing to uphold its data protection obligations. Professional reasoning. When faced with a risk assessment indicating potential noncompliance with data protection laws, a compliance professional should adopt a structured, evidence-based approach. This involves 1. Understanding the specific data processing activities in question. 2. Identifying the relevant legal provisions and principles of the applicable data protection framework. 3. Conducting a detailed review of the data collected, its purpose, and its retention period. 4. Documenting the findings and any necessary remediation steps. 5. Implementing changes to ensure ongoing compliance and regularly reviewing their effectiveness. This systematic process ensures that decisions are grounded in legal requirements and best practices, minimizing risk and upholding ethical standards. Question 8. Market research demonstrates that a new investment product, while potentially lucrative for the firm, carries a higher risk profile than initially communicated to potential investors. A senior executive is pushing for its rapid launch, citing aggressive sales targets. As a certified compliance technician, which approach best navigates this ethical challenge? Option A. Immediately escalate the concerns to the head of compliance and the legal department, requesting a thorough review of the product's risk disclosures and marketing materials against regulatory requirements and ethical standards before any further action is taken. Option B. Rely on the firm's established track record and the executive's assurance that the product is compliant, and proceed with the launch while monitoring client complaints. Option C. Inform the senior executive that the product launch should be delayed until a more comprehensive risk assessment can be conducted, but proceed with the launch if the executive insists, documenting the executive's directive. Option D. Proceed with the product launch as planned, assuming that the sales team will adequately explain the risks to clients and address any potential issues that arise after the launch. The correct answer is A. Immediately escalate the concerns to the head of compliance and the legal department, requesting a thorough review of the product's risk disclosures and marketing materials against regulatory requirements and ethical standards before any further action is taken. Explanation. This scenario presents a common ethical dilemma for compliance professionals, balancing the immediate financial interests of the firm with the long-term integrity of the market and adherence to regulatory principles. The challenge lies in identifying and mitigating potential conflicts of interest that could compromise fair dealing and client trust. A robust ethical decision-making framework is crucial to navigate such situations, ensuring that actions align with both legal obligations and professional standards. The correct approach prioritizes a systematic evaluation of the situation, against established ethical principles and regulatory requirements. It involves a thorough assessment of potential harm, consideration of stakeholder interests, and a commitment to transparency and fairness. This aligns with the core tenets of compliance, which demand proactive identification and management of risks, fostering a culture of integrity and upholding the reputation of the financial services industry. By adhering to a structured ethical framework, compliance professionals can make defensible decisions that protect the firm, its clients, and the broader market. An incorrect approach might involve prioritizing short-term gains or succumbing to pressure from senior management without adequate due diligence. This could lead to regulatory breaches, reputational damage, and a loss of client confidence. For instance, ignoring potential conflicts of interest or downplaying the significance of a regulatory concern to facilitate a profitable transaction would be a direct violation of principles of fair dealing and market integrity. Another failure would be to rely solely on personal intuition or past practices without a structured ethical review, as this lacks the rigor required to address complex ethical challenges and can lead to biased or incomplete decision-making. Professionals should employ a decision-making process that begins with identifying the ethical issue and relevant stakeholders. This is followed by gathering all pertinent facts, considering applicable laws, regulations, and internal policies, and then evaluating potential courses of action against established ethical principles, such as fairness, honesty, and responsibility. Documenting the decision-making process and the rationale behind the chosen course of action is also a critical step in demonstrating due diligence and accountability. Question 9. Regulatory review indicates that a financial services firm has identified unusual activity on a customer database, suggesting a potential unauthorized access to sensitive personal information. The firm's Chief Compliance Officer, CCO, is tasked with overseeing the response. Which of the following actions best aligns with the firm's obligations under the UK GDPR and the ICO's guidance on data breaches? Option A. Inform only those customers who are most likely to be significantly impacted by the breach, based on the CCO's initial assessment of the data accessed. Option B. Immediately initiate the firm's documented data breach response plan, focusing on containing the incident, assessing its scope and impact, and preparing for necessary notifications to the ICO and affected individuals. Option C. Conduct a thorough internal investigation to determine the root cause and extent of the breach before taking any external action or notifying any parties. Option D. Delay notifying the Information Commissioner's Office, ICO, and affected individuals until the firm has a complete understanding of the breach, which could take several weeks. The correct answer is B. Immediately initiate the firm's documented data breach response plan, focusing on containing the incident, assessing its scope and impact, and preparing for necessary notifications to the ICO and affected individuals. Explanation. This scenario presents a professionally challenging situation because it requires immediate and decisive action under pressure, balancing regulatory obligations with the need to protect customer data and maintain trust. The firm has discovered a potential data breach, necessitating a swift and effective response to mitigate harm and comply with legal requirements. The challenge lies in accurately assessing the scope of the breach, understanding the notification obligations, and implementing the correct procedural steps without causing undue panic or further compromising sensitive information. Careful judgment is required to ensure all regulatory mandates are met while acting ethically and responsibly. The correct approach represents best professional practice because it prioritizes immediate containment and assessment, followed by a structured and compliant notification process. This aligns with the principles of data protection regulations, which emphasize prompt action to prevent further unauthorized access or disclosure, and timely notification to affected individuals and relevant authorities. By initiating the data breach response plan, the firm demonstrates a commitment to its regulatory obligations and a proactive stance in managing a security incident. This approach ensures that all necessary steps are taken in a coordinated manner, minimizing potential damage and demonstrating due diligence. An incorrect approach that focuses solely on internal investigation without immediately activating the breach response plan is professionally unacceptable. This failure constitutes a breach of regulatory requirements that mandate prompt action upon discovery of a potential breach. It risks allowing the breach to escalate, increasing the potential harm to individuals and the firm's reputation. Another incorrect approach that involves delaying notification to assess the full impact indefinitely is also a regulatory failure. Regulations typically set strict timeframes for notification, and indefinite delays can lead to significant penalties and loss of trust. Furthermore, an approach that involves selectively notifying only certain individuals based on perceived risk, without a clear, objective, and regulatory justified basis, is ethically and legally flawed. This selective notification can lead to accusations of unfairness and may not meet the broad notification requirements stipulated by data protection laws. Professionals should employ a decision-making framework that begins with recognizing the potential for a data breach and immediately triggering the established data breach response plan. This plan should outline clear steps for containment, assessment, notification, and post-breach analysis. The process involves consulting with legal counsel and relevant internal stakeholders to ensure all actions are compliant and strategically sound. Professionals must remain vigilant, adhere to established protocols, and prioritize transparency and timely communication with affected parties and regulators, as dictated by the specific jurisdiction's laws. Question 10. Market research demonstrates a significant opportunity for a new, innovative financial product. The business development team is eager to launch quickly to capture market share, proposing to address compliance aspects on a reactive basis after the initial release. As a certified compliance technician, what is the most appropriate approach to ensure the organization operates within its regulatory framework? Option A. Implement the product with minimal compliance oversight, relying on the assumption that existing general compliance controls will adequately cover the new offering. Option B. Proceed with the product launch as planned, with the intention of identifying and rectifying any compliance issues that may arise post-launch. Option C. Prioritize the product's revenue-generating potential and defer detailed compliance checks until the product has established a significant market presence. Option D. Conduct a comprehensive compliance review of the new product's design, marketing, and distribution channels before its launch, ensuring alignment with all applicable regulations and internal policies. The correct answer is D. Conduct a comprehensive compliance review of the new product's design, marketing, and distribution channels before its launch, ensuring alignment with all applicable regulations and internal policies. Explanation. Scenario analysis. This scenario presents a common challenge in compliance, balancing the perceived immediate benefits of a new business opportunity against the potential long-term risks and regulatory obligations. The pressure to innovate and capture market share can sometimes lead to overlooking or downplaying compliance requirements. The professional challenge lies in advocating for a robust compliance framework, even when it might appear to slow down or complicate a seemingly lucrative venture. This requires a deep understanding of the regulatory landscape and the ability to articulate the value of compliance beyond mere box-ticking. Correct approach analysis. The correct approach prioritizes a thorough assessment of the new product's compliance implications before launch. This aligns with the fundamental principle of proactive compliance, which is a cornerstone of regulatory frameworks like those governing financial services in the UK, e.g., FCA Handbook. Specifically, it reflects the FCA's emphasis on firms acting with integrity and due skill, care, and diligence, Principle 2, and having adequate systems and controls, CISC Sourcebook. By conducting a comprehensive review, the compliance team ensures that the product adheres to all relevant laws, regulations, and industry best practices. This proactive stance minimizes the risk of regulatory breaches, fines, reputational damage, and potential harm to consumers, thereby safeguarding the organization's long-term viability and integrity. It demonstrates a commitment to embedding compliance into the business strategy from the outset, rather than treating it as an afterthought. Incorrect approaches analysis. Proceeding with the launch without a dedicated compliance review is a significant regulatory and ethical failure. It breaches the duty of care owed to customers and the market, and directly contravenes the FCA's principles for businesses, particularly Principle 6, Customers' Interest, and Principle 7, Communications with Clients. This approach assumes that existing controls are sufficient, which is a dangerous assumption when introducing novel products or services. It also risks significant financial penalties, regulatory sanctions, and severe reputational damage, undermining trust and potentially leading to business failure. Launching the product with a wait-and-see approach to compliance, intending to address issues if they arise, is equally problematic. This demonstrates a lack of foresight and a disregard for regulatory obligations. It places the burden of identifying and rectifying noncompliance on regulators, or, worse, on affected customers. This reactive stance is inherently risky and can lead to retrospective enforcement actions, making remediation more costly and complex. It also signals a weak compliance culture within the organization, focusing solely on the potential revenue generation of the new product without adequately considering its compliance implications, is a failure to uphold the organization's responsibility to operate within the legal and ethical boundaries. This narrow focus prioritizes short-term financial gain over long-term sustainability and stakeholder protection. It can lead to the development and distribution of products that are not fit for purpose, exploit regulatory loopholes, or cause harm, ultimately damaging the firm's reputation and its ability to conduct business in the future. Professional reasoning. Professionals faced with this situation should adopt a structured decision-making process. First, they must clearly identify the relevant regulatory obligations pertaining to the new product or service. This involves consulting the specific rules and guidance applicable to the firm's jurisdiction and business activities. Second, they should conduct a risk assessment, evaluating the potential compliance risks associated with the product's design, marketing, and distribution. Third, they must engage in open and transparent communication with senior management and relevant business units, clearly articulating the compliance requirements and the potential consequences of non-compliance. Fourth, they should advocate for the integration of compliance considerations into the product development lifecycle from the earliest stages. If resistance is encountered, professionals should escalate concerns through appropriate internal channels, and if necessary, seek external legal or compliance advice to ensure all regulatory duties are met. The ultimate goal is to ensure that business objectives are pursued in a manner that is fully compliant with all applicable laws and ethical standards. Question 11. Benchmark analysis indicates that a financial institution's compliance technician is reviewing a series of cross-border payments originating from a corporate client. The client is a well-established entity with a history of legitimate transactions. However, the recent payments involve transfers to multiple newly established shell companies in jurisdictions known for weak AML controls, and the stated business purpose for these transfers is vague and inconsistent across the transactions. Which of the following approaches best demonstrates an understanding of money laundering risks and regulatory expectations under UK law? Option A. Accept the transactions as legitimate given the client's established history and the absence of explicit transaction limits, and continue routine monitoring without further inquiry. Option B. Immediately escalate the activity for a suspicious activity report (SAR) to the National Crime Agency (NCA) due to the involvement of shell companies and high-risk jurisdictions, without further investigation of the client's specific rationale. Option C. Advise the client to cease all cross-border payments to these specific jurisdictions to mitigate potential future risks, while considering the current transactions as acceptable due to the client's established reputation. Option D. Conduct enhanced due diligence (ED) on the recipient shell companies, scrutinize the stated business purpose for economic and commercial rationale, and review the client's overall transaction history for any unusual patterns or deviations from their normal activity. The correct answer is B. Immediately escalate the activity for a suspicious activity report (SAR) to the National Crime Agency (NCA) due to the involvement of shell companies and high-risk jurisdictions, without further investigation of the client's specific rationale. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a compliance technician to distinguish between legitimate business activities and those that may be designed to obscure the origins of illicit funds. The subtlety of layering techniques, especially in cross-border transactions, demands a keen understanding of money laundering typologies and a proactive approach to risk assessment. A failure to identify potential red flags can have severe consequences, including regulatory penalties, reputational damage, and complicity in financial crime. Correct approach analysis. The correct approach involves a comprehensive review of transaction patterns, counterparty due diligence, and the economic rationale behind the transactions. This aligns with the UK's Money Laundering Regulations 2017, MLR 2017, and the Financial Conduct Authority's FCA guidance, which emphasize a risk-based approach. Specifically, Regulation 19 of MLR's 2017 mandates ongoing due diligence and monitoring of business relationships. The FCA's Conduct of Business Sourcebook, COBS, also requires firms to have systems and controls to prevent financial crime. By scrutinizing the source of funds and the legitimacy of the business purpose, the technician is fulfilling their duty to identify and report suspicious activity, thereby upholding regulatory integrity and preventing the financial system from being exploited. Incorrect approach is analysis. One incorrect approach involves solely relying on the absence of explicit transaction limits or the fact that the customer is a known entity. This fails to acknowledge that money laundering can occur through seemingly routine transactions and that even established customers can engage in illicit activities. The MLR's 2017 do not permit a passive approach. Ongoing monitoring and risk assessment are crucial, regardless of customer familiarity. This approach risks overlooking sophisticated layering techniques. Another incorrect approach is to dismiss the transaction simply because it is a cross-border payment. While cross-border transactions inherently carry higher risks, they are not inherently suspicious. The regulatory framework requires an assessment of the specific risks associated with the jurisdiction, the nature of the payment, and the parties involved. Dismissing it outright without further investigation is a failure to apply a risk-based approach and could lead to the rejection of legitimate business. A third incorrect approach is to focus only on the immediate transaction without considering the broader context of the customer's activity and the firm's risk appetite. Money laundering is often a process, and individual transactions may appear innocuous in isolation, but become suspicious when viewed as part of a larger pattern. This approach neglects the importance of understanding the customer's overall financial behavior and the firm's established risk assessment framework, which are fundamental to effective anti-money laundering (AML) compliance. Professional reasoning. Professionals should adopt a structured decision-making process that begins with understanding the firm's AML policies and procedures, which are designed to reflect regulatory requirements. This involves a thorough understanding of customer due diligence (CDD) and enhanced due diligence (ED) requirements, as well as ongoing monitoring obligations. When presented with a potentially suspicious transaction, the professional should 1. Review the transaction details against the customer's profile and expected activity. 2. Assess the risk associated with the transaction, considering factors such as the counterparty, the destination country, the nature of the funds, and the economic rationale. 3. Consult internal policies and seek guidance from senior compliance officers or the MLRO if uncertainty exists. 4. Document all steps taken and the rationale for any decision made. 5. If suspicion remains after due diligence, file a Suspicious Activity Report (SAR) with the National Crime Agency (NCA), as required by the Proceeds of Crime Act 2002. This systematic approach ensures that decisions are evidence-based, compliant with regulations, and ethically sound, prioritizing the prevention of financial crime. Question 12. Implementation of a new risk assessment methodology at a UK-based financial services firm is underway. The compliance team is evaluating several options to identify and assess potential financial crime risks. They need to select an approach that is both effective in identifying emerging threats and compliant with the UK's regulatory framework, including guidance from the Financial Conduct Authority (FCA) and the Joint Money Laundering Steering Group (JMLSG). Which of the following approaches best aligns with these requirements? Option A. A hybrid methodology that combines qualitative assessments of inherent risk with quantitative analysis of control effectiveness and residual risk, allowing for regular scenario testing and expert judgment integration. Option B. A quantitative-only approach that focuses exclusively on historical loss data and statistical modeling, disregarding any qualitative insights or emerging risk indicators. Option C. A purely qualitative approach that relies solely on expert opinion and anecdotal evidence to identify and categorize risks, without specific metrics for likelihood or impact. Option D. Adopting the risk assessment methodology used by the largest competitor in the market, assuming it meets regulatory standards without further internal evaluation. The correct answer is A. A hybrid methodology that combines qualitative assessments of inherent risk with quantitative analysis of control effectiveness and residual risk, allowing for regular scenario testing and expert judgment integration. Explanation. This scenario presents a professional challenge because a compliance team is tasked with selecting a risk assessment methodology without a clear mandate on which approach best suits the firm's specific operational context and regulatory obligations. The firm operates in a complex financial environment, necessitating a methodology that is both comprehensive in identifying potential risks and practical for ongoing implementation. The challenge lies in balancing the theoretical strengths of different methodologies against the firm's resources, existing control environment, and the evolving regulatory landscape. Careful judgment is required to ensure the chosen methodology aligns with the firm's risk appetite and is capable of providing actionable insights for risk mitigation. The correct approach represents best professional practice because it involves a structured evaluation of various methodologies against the firm's unique characteristics and regulatory requirements. This ensures that the chosen method is not only theoretically sound, but also practically applicable and compliant with relevant regulations. A methodology that considers both inherent and residual risk, incorporates qualitative and quantitative factors, and allows for regular review and updates is crucial for effective risk management. This aligns with the principles of robust compliance programs, which demand a proactive and adaptable approach to identifying and managing risks. An incorrect approach that relies solely on a qualitative assessment without considering the potential impact or likelihood quantitatively would be professionally unacceptable. This failure stems from an incomplete understanding of risk, potentially leading to underestimation of significant threats. It also risks noncompliance with regulatory expectations that often require a more granular and data-driven approach to risk assessment. Another incorrect approach, focusing exclusively on a quantitative model without incorporating qualitative expert judgment, would also be professionally flawed. This can lead to an over-reliance on data that may not capture emerging risks or the nuances of human behavior and operational complexities. Such a rigid approach might miss critical risks that are not easily quantifiable, thereby failing to meet the comprehensive nature of regulatory expectations for risk assessment. A third incorrect approach, adopting a methodology simply because it is widely used by competitors without assessing its suitability for the firm, is a failure of due diligence. This approach prioritizes expediency over effectiveness and compliance. It ignores the firm's specific risk profile and control environment, potentially leading to a methodology that is either too complex, too simplistic, or ill-suited to the firm's operational realities and regulatory obligations. The professional reasoning process for similar situations should involve 1. Understanding the firm's business model, operational processes, and risk appetite. 2. Identifying all relevant regulatory requirements pertaining to risk assessment. 3. Researching and understanding the strengths and weaknesses of various risk assessment methodologies, e.g., qualitative, quantitative, hybrid, scenario-based. 4. Evaluating each methodology against the firm's specific context, considering factors like data availability, resource constraints, and the complexity of risks. 5. Selecting a methodology that offers a balanced approach, capable of identifying, assessing, and prioritizing risks effectively, while also being adaptable to future changes. 6. Documenting the rationale for the chosen methodology and establishing a process for its regular review and update. Question 13. Stakeholder feedback indicates that while the firm's mandatory annual data privacy training program has high completion rates, there are concerns about employees' practical application of data privacy principles in their day-to-day tasks. Which of the following approaches would be the most effective in assessing the true impact of this training and identifying areas for improvement? Option A. Reviewing the number of training modules completed by each employee and ensuring all mandatory sessions have been attended. Option B. Analyzing the total hours spent by employees in training sessions throughout the year. Option C. Conducting a survey asking employees to rate their own understanding of data privacy regulations after completing the training. Option D. Implementing scenario-based assessments and knowledge checks that require employees to apply data privacy concepts to realistic work situations. The correct answer is D. Implementing scenario-based assessments and knowledge checks that require employees to apply data privacy concepts to realistic work situations. Explanation. This scenario is professionally challenging because it requires balancing the need for comprehensive data privacy training with the practical constraints of employee time and engagement. Compliance officer must ensure that training is not only legally compliant, but also effective in fostering a culture of data protection. The challenge lies in designing and implementing a training program that is impactful without being overly burdensome, thereby risking employee apathy or resistance. Careful judgment is required to select the most appropriate method for assessing the effectiveness of such a program. The correct approach represents best professional practice because it directly measures the intended outcome of the training. Improved employee understanding and application of data privacy principles. By assessing the practical application of knowledge through scenario-based exercises and knowledge checks, the organization can identify specific areas where employees may still be struggling and tailor further training or support. This aligns with the principles of continuous improvement in compliance programs and demonstrates a commitment to robust data protection, which is a key expectation under data privacy regulations. Ethically, it ensures that employees are genuinely equipped to handle sensitive data responsibly. An incorrect approach that relies solely on attendance records fails to measure the effectiveness of the training. Employees can attend sessions without absorbing or retaining the information, leading to a false sense of compliance. This poses a regulatory risk as the organization cannot demonstrate that its employees are adequately trained to protect data, potentially violating data protection laws. Ethically, it represents a superficial commitment to data privacy, prioritizing form over substance. Another incorrect approach that focuses only on the duration of the training ignores the quality and relevance of the content. A lengthy training session that is poorly designed or irrelevant to employees' daily tasks will not improve data privacy practices. This approach risks regulatory noncompliance by failing to ensure that employees receive the necessary knowledge and skills to handle data appropriately. It also creates an ethical issue by wasting employee time on ineffective training. A third incorrect approach that relies on employee self-assessment of understanding is subjective and prone to bias. Employees may overestimate their knowledge or feel pressured to report a high level of understanding, even if they are unsure. This provides an unreliable measure of training effectiveness and can mask significant gaps in data privacy knowledge, leading to potential data breaches and regulatory penalties. It is ethically questionable to rely on such a subjective measure when the protection of personal data is at stake. The professional decision-making process for similar situations should involve a multifaceted approach to training evaluation. First, clearly define the learning objectives of the training program. Second, select assessment methods that directly measure the achievement of these objectives, such as practical exercises, quizzes, and post-training performance monitoring. Third, gather feedback from employees to understand their perception of the training's relevance and effectiveness. Finally, use the evaluation data to continuously refine and improve the training program, ensuring it remains current, relevant, and impactful in fostering a strong data privacy culture. Question 14. Risk assessment procedures indicate a potential gap in the firm's procedures for handling client complaints, specifically concerning the timeliness of acknowledgments and resolutions as mandated by FCA rules. Which of the following approaches to developing new compliance policies and procedures is most appropriate for addressing this identified risk? Option A. Draft a policy that uses highly technical legal language and references numerous obscure regulatory clauses to ensure absolute technical accuracy, even if it makes the policy difficult for frontline staff to understand. Option B. Adopt a generic template for complaint handling policies readily available online, assuming it covers all necessary regulatory aspects without further customization or internal review. Option C. Develop a comprehensive policy that clearly outlines the regulatory requirements for complaint handling, defines specific timelines for acknowledgement and resolution, assigns responsibility for each stage of the process, and establishes a clear escalation path for complex cases, with provisions for regular review and staff training. Option D. Focus solely on the regulatory requirement for acknowledgement and create a separate, brief procedure for that, deferring the development of resolution timelines and escalation procedures to a later, unspecified date. The correct answer is C. Develop a comprehensive policy that clearly outlines the regulatory requirements for complaint handling, defines specific timelines for acknowledgement and resolution, assigns responsibility for each stage of the process, and establishes a clear escalation path for complex cases, with provisions for regular review and staff training. Explanation. Scenario analysis. This scenario presents a common challenge in compliance, translating high-level regulatory requirements into practical, actionable policies and procedures. The professional challenge lies in ensuring that the developed policies are not only compliant with the specific regulations, in this case, assumed to be UK Financial Conduct Authority, FCA, rules and relevant CISI guidelines for a certified compliance technician, but also effectively implemented within the firm's unique operational context. Overly generic or overly complex policies can lead to non-compliance, operational inefficiency, or a breakdown in the compliance culture. Careful judgment is required to balance regulatory precision with operational feasibility and clarity for staff. Correct approach analysis. The correct approach involves a systematic process of identifying specific regulatory obligations, understanding the firm's business activities, and then drafting policies that directly address the identified risks and regulatory requirements. This approach ensures that policies are tailored, relevant, and actionable. It prioritizes clarity, assigns responsibilities, and establishes monitoring mechanisms, all of which are critical for effective compliance. This aligns with the FCA's principles-based regulation, which expects firms to have robust systems and controls to manage risks and meet regulatory obligations. CISI guidelines also emphasize the importance of clear, documented procedures for compliance professionals. Incorrect approaches analysis. One incorrect approach involves relying solely on generic template policies without adapting them to the firm's specific operations. This fails to address the nuances of the firm's business and may overlook specific risks or regulatory interpretations relevant to its activities, leading to potential breaches of FCA rules. Another incorrect approach is to create overly complex and jargon-filled policies that are difficult for staff to understand and implement. This can result in unintentional noncompliance and undermine the effectiveness of the compliance program, failing to meet the FCA's expectation of clear communication and the CISI emphasis on practical application of compliance knowledge. A third incorrect approach is to focus only on the letter of the law without considering the spirit or the underlying risk. This can lead to a tick-box mentality, where policies are technically compliant but do not effectively mitigate the intended risks, potentially exposing the firm to regulatory scrutiny and reputational damage. Professional reasoning. Compliance professionals should adopt a structured approach to policy development. This begins with a thorough understanding of the applicable regulatory framework, e.g., FCA handbook, relevant legislation, and the firm's specific business model and risk appetite. The next step is to conduct a risk assessment to identify potential compliance gaps. Policies should then be drafted to directly address these identified risks and regulatory obligations, ensuring they are clear, concise, and assign specific responsibilities. Regular review and updates are essential to maintain relevance and effectiveness. This systematic and risk-based approach ensures that policies are both compliant and practical, fostering a strong compliance culture. Question 15. Governance review demonstrates that the firm's existing, robust anti-money laundering AML program, designed for its primary domestic market, is being rolled out to new international subsidiaries operating in diverse regulatory environments. The compliance team is considering how to best adapt this program. Which of the following approaches best addresses the international compliance considerations? Option A. Adopt a minimalist approach, implementing only the most basic AML controls that are universally recognized, and relying on local management to address any additional requirements. Option B. Fully delegate the responsibility for AML compliance in each new subsidiary to the local general manager, with minimal central oversight from the global compliance function. Option C. Implement the domestic AML program verbatim across all new subsidiaries, assuming that its proven effectiveness domestically will translate directly to all foreign markets. Option D. Conduct a detailed, jurisdiction-specific risk assessment for each new subsidiary, engaging local legal and compliance experts to tailor the AML program to meet local regulatory requirements and enforcement priorities, while ensuring alignment with the firm's global risk appetite. Correct answer is D. Conduct a detailed, jurisdiction-specific risk assessment for each new subsidiary, engaging local legal and compliance experts to tailor the AML program to meet local regulatory requirements and enforcement priorities, while ensuring alignment with the firm's global risk appetite. Explanation. Scenario analysis. This scenario presents a common implementation challenge in international compliance, adapting a robust domestic compliance program to diverse foreign regulatory landscapes. The challenge lies in the inherent differences in legal frameworks, cultural norms, enforcement priorities, and the sheer volume of evolving international regulations. A compliance officer must navigate these complexities without compromising the integrity of the firm's global operations or exposing it to significant legal and reputational risks. The need for a nuanced, risk-based approach that respects local specificities while maintaining overarching compliance principles is paramount. Correct approach analysis. The correct approach involves a thorough, risk-based assessment of each target jurisdiction's specific regulatory requirements and enforcement environment. This entails engaging local legal counsel and compliance experts to understand nuances that might be missed by a purely headquarters-driven perspective. Implementing a tiered approach, where high-risk jurisdictions receive more intensive scrutiny and resource allocation, is a hallmark of best professional practice. This aligns with the principle of proportionality in compliance, ensuring that resources are deployed effectively to mitigate the most significant risks. It also demonstrates a commitment to understanding and adhering to the spirit and letter of local laws, fostering trust with regulators and stakeholders in those regions. This approach is ethically sound, as it prioritizes diligent adherence to all applicable laws and regulations. Incorrect approach is analysis. One incorrect approach is to assume that a successful domestic compliance program can be directly replicated abroad without modification. This fails to acknowledge the fundamental differences in legal systems and regulatory expectations across jurisdictions. It represents a significant regulatory failure by potentially leading to noncompliance with local laws, exposing the firm to fines, sanctions, and reputational damage. Ethically, it demonstrates a lack of due diligence and respect for foreign legal frameworks. Another incorrect approach is to adopt a lowest common denominator strategy, implementing only the most basic, universally applicable compliance measures. While seemingly efficient, this approach ignores the higher standards and specific requirements that may exist in certain jurisdictions. This can lead to regulatory breaches in those more stringent environments and is ethically questionable as it prioritizes cost saving over robust compliance where it is most needed. A third incorrect approach is to delegate compliance entirely to local management without adequate oversight or integration with the global compliance framework. While local expertise is crucial, a complete abdication of central oversight can lead to fragmented and inconsistent compliance efforts, potentially creating blind spots and allowing significant risks to go unaddressed. This can be a regulatory failure if it results in a lack of a cohesive and effective global compliance program. And ethically, it can be seen as a failure to adequately resource and manage the compliance function across the organization. Professional reasoning. Professionals facing this challenge should employ a systematic, risk-based decision-making process. This begins with a comprehensive mapping of all relevant jurisdictions and their primary regulatory bodies. Next, conduct a detailed risk assessment for each jurisdiction, considering factors such as the nature of the business activities, the volume of transactions, the potential for illicit activity, and the known enforcement landscape. Engage with local experts to validate assumptions and identify specific compliance obligations. Develop a tailored implementation plan for each jurisdiction, prioritizing resources based on the risk assessment. Establish clear lines of accountability and reporting mechanisms that integrate local efforts into the global compliance framework. Regular monitoring, auditing, and updating of these programs are essential to adapt to evolving regulatory environments. Question 16. Investigation of a whistleblower report alleging significant financial irregularities within the procurement department. The compliance officer must determine the most effective and compliant method to proceed. The report suggests potential kickbacks and bid rigging. Option A. Conduct a discrete, targeted investigation focusing on gathering specific evidence related to the alleged kickbacks and bid rigging, interviewing key personnel and reviewing relevant documentation while maintaining confidentiality. Option B. Escalate the matter to external legal counsel for immediate litigation without conducting any internal fact-finding. Option C. Confront the suspected individuals directly with the allegations and demand immediate confessions to expedite the process. Option D. Immediately suspend all procurement activities and initiate a broad audit of all past transactions, notifying all employees of the ongoing investigation. The correct answer is D. Immediately suspend all procurement activities and initiate a broad audit of all past transactions, notifying all employees of the ongoing investigation. Explanation. This scenario presents a professional challenge due to the need to balance the imperative of thorough investigation with the potential for reputational damage and the disruption of normal business operations. The compliance officer must exercise sound judgment to ensure that the investigation is both effective in uncovering the truth and conducted in a manner that minimizes negative consequences. The correct approach represents best professional practice because it prioritizes a systematic and evidence-based methodology. By focusing on identifying the specific type of fraud, gathering concrete evidence, and understanding the underlying control weaknesses, the compliance officer can accurately assess the scope and impact of the misconduct. This aligns with regulatory expectations for robust internal controls and fraud prevention, as well as ethical obligations to act with diligence and integrity. An incorrect approach that focuses solely on immediate disciplinary action without a thorough investigation risks penalizing individuals unfairly and failing to address the systemic issues that allowed the fraud to occur. This could lead to regulatory scrutiny for inadequate oversight and a failure to implement effective controls. Another incorrect approach that involves broad, unsubstantiated accusations can damage employee morale, create a climate of distrust, and potentially lead to legal challenges for defamation or wrongful termination. This demonstrates a failure to adhere to principles of fairness and due process. A further incorrect approach that involves ignoring the issue due to its sensitive nature or potential for negative publicity is a direct contravention of regulatory duties to report and address misconduct, exposing the organization to significant legal and financial penalties for non-compliance, and a failure to maintain a sound control environment. Professionals should employ a decision-making framework that begins with understanding the allegations and the relevant regulatory framework. This involves a phased approach: initial assessment, evidence gathering, analysis, reporting, and remediation. The focus should always be on objective fact-finding, adherence to established procedures, and clear communication with relevant stakeholders, ensuring that all actions are defensible and aligned with both legal requirements and ethical standards. Question 17. What factors determine the most effective approach to data classification and handling procedures within a regulated financial services environment in the UK? Option A. A comprehensive risk-based assessment considering data sensitivity, legal and regulatory obligations, and potential impact of breaches. Option B. A reliance on individual employee judgment and informal guidelines for determining data sensitivity and appropriate handling measures. Option C. A classification system primarily driven by the volume of data and the frequency of its access by employees. Option D. A standardized system applied uniformly to all data types, irrespective of their inherent sensitivity or legal status. The correct answer is A. A comprehensive risk-based assessment considering data sensitivity, legal and regulatory obligations, and potential impact of breaches. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a compliance officer to balance the need for efficient data handling with the paramount importance of protecting sensitive information. Misclassifying data or implementing inadequate handling procedures can lead to severe regulatory penalties, reputational damage, and breaches of client trust. The challenge lies in developing and enforcing a system that is both practical for daily operations and robust enough to meet stringent data protection requirements. Correct approach analysis. The correct approach, focusing on a risk-based assessment of data sensitivity and regulatory obligation, represents best professional practice. This methodology ensures that resources are allocated effectively, with the most sensitive data receiving the highest level of protection. It aligns with the principles of data minimization and purpose limitation, which are fundamental to many data protection regulations. By understanding the inherent risks associated with different data types and the specific legal requirements governing their use and storage, a compliance officer can implement proportionate controls. This proactive and informed approach minimizes the likelihood of breaches and ensures compliance with relevant laws, such as the UK's Data Protection Act 2018 and the GDPR. Incorrect approaches analysis. Implementing a one-size-fits-all classification system without considering data sensitivity or regulatory impact is a significant regulatory and ethical failure. This approach is inefficient, potentially overburdening the handling of low-risk data, and critically, underprotecting high-risk data, leading to potential breaches and noncompliance. Adopting a system solely based on data volume or frequency of access, without regard for its confidential nature or legal restrictions, is another regulatory and ethical failure. This prioritizes operational convenience over data security and privacy, directly contravening the core tenets of data protection laws. Such an approach risks exposing sensitive personal or commercially confidential information to unauthorized access or disclosure. Relying exclusively on employee intuition for data classification and handling, without formal procedures or training, is a recipe for disaster. This approach is highly susceptible to human error, inconsistency, and a lack of accountability, representing a clear failure to establish adequate controls and training as mandated by regulatory frameworks. It creates significant legal and ethical exposure due to the absence of a structured and auditable process. Professional reasoning. Professionals should approach data classification and handling by first identifying all relevant regulatory frameworks applicable to the data being processed. This involves understanding the definitions of personal data, sensitive personal data, and other categories of confidential information as defined by law. Subsequently, a risk assessment should be conducted for each data category, considering the potential impact of unauthorized access, disclosure, or loss. Based on this assessment and regulatory requirements, a tiered classification system should be developed, with clear guidelines for handling, storage, access, and disposal of data at each tier. Regular training and auditing are essential to ensure adherence to these procedures and to adapt to evolving threats and regulations. Question 18. When evaluating potential risk mitigation strategies for a new regulatory requirement concerning data privacy, a compliance team is considering three approaches: implementing a new, comprehensive software system, enhancing existing manual processes with additional oversight, or outsourcing the specific function to a third-party vendor. Which approach best aligns with a proactive and sustainable risk mitigation framework? Option A. Enhancing existing manual processes with additional oversight, relying on staff training and periodic reviews. Option B. Implementing a solution that is the least expensive in terms of initial setup, regardless of long-term operational impact. Option C. Outsourcing the specific function to a third-party vendor without conducting thorough due diligence on their compliance capabilities. Option D. Implementing a new, comprehensive software system that automates controls and provides robust audit trails. The correct answer is D. Implementing a new, comprehensive software system that automates controls and provides robust audit trails. Explanation. This scenario presents a common challenge for compliance professionals, balancing the need for robust risk mitigation with operational efficiency and cost-effectiveness. The firm is facing a new regulatory requirement that necessitates changes to its existing processes. The challenge lies in selecting the most appropriate strategy from several viable options, each with its own set of implications for risk, cost, and operational impact. Careful judgment is required to ensure the chosen strategy not only meets the regulatory mandate, but also aligns with the firm's risk appetite and business objectives. The correct approach involves a comprehensive assessment of the new regulatory requirement and its potential impact on the firm's operations and risk profile. It necessitates understanding the specific controls that will effectively mitigate the identified risks, considering both the upfront investment and ongoing maintenance costs. This approach prioritizes a proactive and informed decision, grounded in a thorough understanding of the regulatory landscape and the firm's internal capabilities. It represents best professional practice because it demonstrates due diligence, a commitment to regulatory compliance, and a strategic approach to risk management, ensuring that the chosen mitigation strategy is both effective and sustainable. An incorrect approach would be to implement a solution that is overly simplistic or reactive, failing to adequately address the root causes of the risk or the specific requirements of the regulation. For instance, adopting a strategy that merely addresses the symptom of the risk without understanding the underlying issue could lead to continued exposure. Another incorrect approach might involve selecting a mitigation strategy based solely on the lowest upfront cost, without considering the long-term operational burdens, potential for residual risk, or the possibility of future regulatory scrutiny. Such a choice would be a failure to exercise professional judgment and could result in a breach of regulatory obligations and ethical standards, potentially exposing the firm to significant penalties and reputational damage. Professionals should approach such decisions by first thoroughly understanding the regulatory obligation and the specific risks it aims to address. This involves engaging with relevant stakeholders, including legal, IT, and business units, to gather comprehensive information. A risk assessment should then be conducted to identify potential control gaps. Following this, a comparative analysis of different mitigation strategies should be performed, evaluating each against criteria such as effectiveness in risk reduction, cost, both initial and ongoing, operational feasibility, and alignment with the firm's risk appetite. The decision should be documented, with clear justification for the chosen strategy, and regularly reviewed for effectiveness. Question 19. Operational review demonstrates a significant data breach following a prolonged system outage. The IT department is pushing for an immediate restoration of services to minimize business disruption, suggesting a quick fix to the identified vulnerability and a return to normal operations. The compliance team is concerned about the potential exposure of sensitive customer data and the implications for regulatory adherence. Which of the following actions best aligns with industry-specific compliance standards and professional best practices in this scenario? Option A. Focus on communicating the breach to affected customers and regulators without undertaking a detailed technical investigation, assuming the quick fix will suffice. Option B. Engage external cybersecurity consultants to assess the damage and recommend immediate steps, but proceed with service restoration based on their initial, high-level recommendations to meet business demands. Option C. Prioritize the immediate restoration of services by applying a superficial patch to the identified vulnerability, deferring a deeper investigation and remediation to a later date. Option D. Conduct a thorough root cause analysis of the breach and outage. Implement comprehensive corrective actions to address the identified vulnerabilities and verify the effectiveness of these measures before resuming full operations. The correct answer is D. Conduct a thorough root cause analysis of the breach and outage. Implement comprehensive corrective actions to address the identified vulnerabilities and verify the effectiveness of these measures before resuming full operations. Explanation. This scenario is professionally challenging because it requires a compliance professional to balance the immediate need for operational efficiency with the long-term imperative of maintaining robust data security and compliance with industry-specific standards. The pressure to resume services quickly can lead to shortcuts that undermine fundamental security controls, creating significant risks. Careful judgment is required to assess the true impact of the outage on sensitive data, and to ensure that remediation efforts address the root cause, not just the immediate symptom. The correct approach represents best professional practice because it prioritizes a thorough investigation and remediation, aligned with established industry standards like ISO 27001. ISO 27001, a globally recognized standard for information security management systems, mandates a systematic approach to managing sensitive company information so that it remains secure. By conducting a root cause analysis, implementing corrective actions, and verifying their effectiveness before resuming full operations, the compliance team ensures that the vulnerabilities that led to the incident are addressed. This proactive stance not only mitigates the risk of recurrence, but also demonstrates a commitment to data protection and regulatory adherence, fostering trust with stakeholders and avoiding potential fines or reputational damage. An incorrect approach that focuses solely on restoring services without a comprehensive security assessment fails to address the underlying vulnerabilities. This could lead to a repeat incident, exposing sensitive data and violating the spirit and letter of data protection regulations. Ethically, this approach prioritizes expediency over the duty to protect customer data. Another incorrect approach that involves implementing only superficial security patches without understanding the root cause is also professionally unacceptable. This is akin to treating a symptom without diagnosing the disease. It creates a false sense of security and leaves the organization exposed to similar or different threats. This demonstrates a lack of due diligence and a failure to uphold the professional standard of ensuring effective security controls. The professional decision-making process for similar situations should involve a structured risk assessment framework. This includes identifying the incident and its immediate impact, containing the damage, investigating the root cause thoroughly, developing and implementing corrective and preventive actions, verifying the effectiveness of these actions, and then and only then resuming normal operations. Throughout this process, clear communication with relevant stakeholders and documentation of all steps taken are crucial. The compliance professional must act as a guardian of data integrity and security, advocating for the necessary time and resources to ensure compliance, even under pressure. Question 20. Cost-benefit analysis shows that implementing a fully comprehensive, best practice compliance framework across all business units would incur substantial upfront and ongoing costs, potentially impacting short-term profitability. The firm is considering several approaches to manage these costs while still meeting its regulatory obligations under the FCA's Principles for Businesses and the CISC Sourcebook. Which of the following approaches best aligns with regulatory expectations and professional compliance practice in the UK? Option A. Outsource all compliance functions to a third-party provider without conducting an internal assessment of the firm's specific risk profile, relying solely on the provider's general compliance services. Option B. Prioritize implementing robust controls in high-risk areas identified through a detailed risk assessment, with a phased approach to enhancing controls in low-risk areas, ensuring all activities remain compliant with relevant FCA rules and guidance. Option C. Defer significant compliance investments until the firm's financial performance improves, arguing that current profitability constraints make comprehensive implementation unfeasible. Option D. Focus on implementing only the most basic, legally mandated compliance procedures to minimize immediate expenditure, assuming that these minimal measures will satisfy regulatory scrutiny. The correct answer is B. Prioritize implementing robust controls in high-risk areas identified through a detailed risk assessment, with a phased approach to enhancing controls in low-risk areas, ensuring all activities remain compliant with relevant FCA rules and guidance. Explanation. This scenario is professionally challenging because it requires a compliance officer to balance the practical realities of resource allocation with the absolute necessity of adhering to regulatory mandates. The firm is facing a situation where implementing a comprehensive compliance framework, as mandated by the FCA's Principles for Businesses and CISC Sourcebook, would incur significant costs, potentially impacting profitability. The challenge lies in determining the most effective and compliant way to allocate limited resources to meet these obligations without compromising the firm's financial health, or more importantly, its regulatory standing. The correct approach represents best professional practice because it prioritizes regulatory compliance as a non-negotiable foundation for business operations. The FCA's principles, particularly Principle 3 Management and Control and Principle 5 Market Conduct, along with the detailed requirements within CISC, necessitate robust systems and controls. A thorough risk assessment, as outlined in the correct approach, is the cornerstone of an effective compliance framework. It allows the firm to identify, assess, and mitigate compliance risks in a structured and proportionate manner, ensuring that resources are directed towards the most critical areas. This proactive and risk-based approach aligns with the FCA's supervisory philosophy, which emphasizes firms taking ownership of their regulatory obligations. It demonstrates a commitment to integrity and good governance, which are paramount for maintaining client trust and market confidence. An incorrect approach that focuses solely on cost reduction without a commensurate assessment of regulatory impact would be a significant ethical and regulatory failure. For example, choosing to implement only the minimum required controls without considering the firm's specific risk profile could lead to breaches of CISC requirements related to adequate systems and controls, potentially exposing clients to harm and the firm to regulatory sanctions. Another incorrect approach, such as deferring essential compliance investments due to short-term financial pressures, directly contravenes the FCA's expectation that firms will maintain adequate financial and operational resources to comply with their obligations. This demonstrates a lack of commitment to regulatory adherence and could be viewed as a deliberate attempt to circumvent responsibilities, leading to severe reputational damage and potential enforcement action. The professional decision-making process for similar situations should involve a systematic risk-based assessment. This begins with a clear understanding of all applicable regulatory requirements, e.g., FCA Handbook CISC relevant principles. Next, the firm must conduct a comprehensive risk assessment to identify potential compliance failures and their impact. Based on this assessment, a proportionate compliance strategy should be developed, prioritizing controls for high-risk areas. The cost-benefit analysis should then be applied to evaluate different implementation options, always ensuring that the chosen path meets the minimum regulatory standards and effectively mitigates identified risks. Regular review and adaptation of the compliance framework are also crucial to ensure its ongoing effectiveness.